Imagine waking up tomorrow with the ability to make life-changing returns from a simple decision you make today. Sounds too good to be true, right? Well, here's the thing. Cryptocurrencies are the future. And while the world of digital assets seems overwhelmingly complicated, there are hidden opportunities for massive gains just waiting to be uncovered. But how do you cut through the noise, avoid the scams, and make decisions that lead to real wealth? In today's video, we're going to break down cryptocurrency from the ground up, show you how it works, and tell you exactly where to find those life-changing opportunities that seem impossible to spot. Stay tuned. Let's start with the basics. Most people think of cryptocurrencies as digital money, but that's a common misconception. Bitcoin isn't a currency like the US dollar. Instead, most cryptocurrencies are more like digital assets. And here's why. When you buy a cryptocurrency, what you're really getting is a unique digital serial number. Just like when you buy a stock, you're getting a share in a company. Now you might be wondering, who issues this digital asset? Unlike stocks, which are issued by companies, no one company controls the issuance of cryptocurrencies. The issuance of coins is predetermined by computer code and the network maintaining the blockchain. This means it's not a centralized company controlling everything, it's decentralized. But how does this ownership get tracked? Well, instead of a centralized authority keeping a record, it's tracked by a network of computers. These computers are incentivized with fees and newly minted cryptos to keep these records correct and tamper-proof. And that brings us to a crucial point. You own your crypto. Cryptos can't be seized the way your bank account or stocks can be. This gives you true ownership in the digital world. So, now that we know cryptos are digital assets, let's dive into the two main types, coins and tokens. Coins are the native assets of their blockchains. For instance, Bitcoin, BTC, is the coin on the Bitcoin blockchain. Coins are used to pay for network fees and reward miners for maintaining the blockchain. Coins are relatively hard and expensive to create, so there are only a few dozen of them. On the other hand, tokens are digital assets built on top of other blockchains. Tokens are like apps on your phone, while coins are like the operating system that makes everything run. For example, Aave is a token built on the Ethereum blockchain, and it's used within the Aave application for decentralized lending and borrowing. While there are millions of tokens, many of them are essentially worthless. But the few with strong use cases and narratives, like Aave, have proven to hold real value. Here's the secret. Narratives drive the market. Cryptos don't just rise because of technology or code. They rise because of what investors believe about them. For instance, Bitcoin has a narrative. It's digital gold and is a store of value. That's a narrative anyone can understand. It's simple, it's relatable, and that's why Bitcoin has become the largest cryptocurrency by market cap. But not all narratives are created equal. Take a look at the AI agent cryptos or even meme coins. When these narratives resonate, cryptos in those spaces can skyrocket. Here's the key to understanding crypto. Narratives that are easy for people to grasp and believe in lead to the biggest gains. If you want to spot the next 100x opportunity, you need to ask yourself, what narrative is emerging now? Now let's talk about finding those next big opportunities. Because here's a harsh truth. By the time a crypto is the hottest trend, most of the gains have already been made. So, if you're reading about a crypto that's already gone viral, you might be too late. The secret is looking ahead to what comes next. The trick is to find the next big niche, whether it's DeFi, SocialFi, AI, or something else, and uncover the cryptos with strong narratives in those spaces. For example, if you believe GameFi is going to explode, look for tokens in that space and ask, what's their narrative? Once you've got a few cryptos in mind, check these 4 things. Price tag low is good for growth potential. Market cap, smaller market cap, means more room to grow. Circulating supply, make sure most of the tokens are in circulation, not locked up with insiders. Exchange listings, more exchanges equals more exposure. But here's where the line gets thinner. Risk. With smaller market caps come bigger potential rewards, but also higher risks. Here's the golden rule. Do your own research and don't just follow the hype. That's why it's crucial to make informed decisions based on data and clear analysis. But what if you miss out? Don't worry, crypto follows a 4-year cycle. Even if you feel like you missed the boat on this cycle, there's always the next one. In the meantime, you can research, explore new niches, and start preparing for the next big surge.